first quarter of the year is one of the most misunderstood moments in the Raleigh housing market. Buyers think they should wait, sellers think they've already missed it. Both are wrong. This is the first of my monthly Raleigh market updates, where I break down what's actually happening and what it means for buyers and sellers. And stay with me until the end because I'll be sharing the most important things to consider if you're thinking about buying or selling in the market right now or in the near future. Hi, I'm Kate, a realtor here in Raleigh, North Carolina. Before real estate, I worked in marketing analytics, and now I use that background to help buyers and sellers move through the market with confidence because every decision we make is grounded in data. If you'd like to work with me or chat one-on-one, you can reach me via text, email, or my online contact form in the description below. Let's get started. Over the next few minutes, we're going to do more than just look at numbers. We're going to decode what's actually happening in the Raleigh single-family housing market and uncover the story the data is telling so you can make smart, informed decisions. But before we dive in, a quick note on the data. Everything referenced in this video comes from publicly available sources, and you'll find links to those exact datasets in the pinned comment below. Most of the charts you'll see, though, are from Redfin's data center. You may notice some of this data lags real time by a couple of months. That is normal. High quality housing data takes time to aggregate, clean, and validate. As a former analyst, I prefer transparent, well-documented data over fast numbers, and Redfin does a strong job explaining how their metrics are calculated. Now, let's talk about where we've been because context matters. To understand where the market is going, we need to first understand how it has behaved over the last 12 months. This chart shows two of the most important metrics, the median sale price and the median days on market. In a healthy real estate market, these two metrics typically move in opposite directions. When homes are selling faster, prices go up because there's enough buyer demand to support that. When homes take longer to sell, prices tend to soften. That's basic supply and demand. For the first half of the year, Raleigh followed that script almost perfectly. We started the year slowly in January, with homes taking about 55 days to sell at a median price around $472,000. As we moved into the spring, days on market dropped sharply into the low 20s and prices climbed, peaking around 525 in June. Faster sales, higher prices, textbook spring market. Then, late summer introduced what I call a statistical illusion. In August, median price spiked to the highest point of the year, while days on market increased instead of falling. That's not a hotter market, that is a thinner one. Sales volume dropped significantly that month, and the few homes that did sell were disproportionately higher end, which skewed the median upward. The immediate correction that followed confirmed that this wasn't a trend, it was a data anomaly. This is why looking at a single number without understanding the context can be misleading. Evidence of this is further shown in Redfin's August 2025 housing report, where they mentioned that buyer activity in August dropped to the lowest level in records going back to 2013, a historical low aside from the pandemic. And that imbalance was part of what made summer of 2025 one of the strongest buyers markets on record. So that price jump that we saw at the time was not an indication of seller leverage, but actually quite the opposite because it was driven by lower buyer participation in the market. Now, let's layer in inventory and negotiation power. Inventory, measured in months of supply here, tells us how long it would take to sell all the current listings at the current pace. A balanced market typically falls between 4 and 6 months. Earlier in the year, Raleigh was operating closer to 2 months of supply. Today, we are sitting around 3.5 months. That shift matters. It means buyers have more options, more time, and more leverage than they did even a year ago. And you can see that reflected in the sale to price ratio. Earlier in the year, buyers were paying nearly full asking price. Today, the typical home is selling for about 98% of list price. That 2% gap might sound small, but on a $520,000 home, that's roughly $10,000 of negotiating room. So where does that leave us right now? As of the most recent data, the median sale price for single-family homes in Raleigh is holding around $520,000. Prices are essentially flat year over year, and this tells us something important. Desirable homes are holding value. We're not seeing much fluctuation there. But here's the key numbers sellers need to understand. Median days on the market has jumped to 52 days. That is over 40% longer than last year. Homes are taking significantly more time to sell. This tells us we're in a market where price still absolutely matters, but it's no longer the only lever that determines success. Homes priced appropriately for today's conditions are still selling, but mispriced homes aren't being rescued by demand the way that they were in the past. The cost of getting it wrong right now isn't just a price reduction, it's time, carrying costs, or the risk of potentially not selling at all. Now let's zoom out briefly and look at the national picture because it explains why Raleigh feels so different. This national chart shows the balance between buyers and sellers over the last decade. For nearly 10 years, buyers outnumbered sellers, creating the seller dominated environment everyone became used to. In 2022, those lines crossed. Sellers began to outnumber buyers, and that imbalance has persisted. This single shift explains almost everything we're seeing locally: longer days on market, more negotiation, and a return to strategy over speed. So, what does that mean for quarter one of 2026? Simply put, this is normalization. The frenzy is over, and the market is settling into a more sustainable rhythm. Inventory is expected to hover between 3 and 3.5 months. Prices are likely to remain stable with flat to modest growth rather than dramatic swings. And with the Federal Reserve signaling potential rate cuts, mortgage rates may slowly trend down into the high 5 to low 6 range, which could bring some more buyers back into the market as we head towards spring. That's what makes the first quarter a transition window, the final stretch before spring competition ramps up, and an opportunity for both buyers and sellers who approach it strategically. So, how should people think about this market? For sellers, this period is about positioning, not panic. Listing earlier can mean less competition before inventory builds. Pricing needs need to reflect current buyer behavior, not last year's headlines. Presentation and condition matter more when buyers have more choices. And incentives like rate buydowns have become one of the most effective ways to stand out without necessarily cutting price. For buyers, quarter one offers a unique balance. Seller motivation tends to be a little higher after the winter slowdown, while competition is often lighter than in late spring. Rather than focusing only on price, many buyers are finding leverage through terms, seller paid costs, flexible timing, and payment structures that improve affordability without overpaying. Now let's talk about the long-term picture because today's numbers don't exist in a vacuum. Raleigh's growth is being shaped by major development projects that will influence housing demand for decades. I actually have a separate video here where I go much deeper into these developments and what they mean for different parts of the city, and that can be found on my channel. We're seeing significant transformation around Dix Park and downtown, creating a more connected, walkable city. Innovation hubs like North Hills and RTP continue to attract jobs and talent, and transit-oriented growth, including Raleigh's bus rapid transit corridors, is laying the foundation for long-term value around key routes. This combination of development, infrastructure, and employment growth is why I remain confident in Raleigh's long-term fundamentals, even as the market normalizes in the short term. If you'd like to talk through what this means for your specific situation, whether you're buying or selling, you can reach me via text, email, or my online contact form in the description below. I'd be happy to walk through the data with you and help you build a plan that fits today's market. Thanks so much for watching. If you found this video helpful, consider subscribing and let me know in the comments what questions you want answered in the next market update. I'll see you in the next video.